Fidelity and Vanguard are two of the largest investment companies in the world. As of June 2021, Fidelity boasts 38 million individual investors and $11.1 trillion in total customer assets. Meanwhile, Vanguard has more than 30 million investors and $7.2 trillion in global assets under management as of January 2021. Both brokers have solid industry reputations and offer a large selection of low-cost mutual funds, ETFs, advice, and related services. Let's take a look at Vanguard versus Fidelity and some of the most important areas to consider. Before we start, hit that like button and subscribe to our channel to get such informative videos. Let's talk about fees first. A commission-lowering wave has struck brokerage firms over the last couple of years, and Fidelity and Vanguard have both followed suit. To trade stocks, ETFs, options, and most mutual funds, clients of both firms will avoid commissions altogether. Options at Vanguard come with a minimal $1 contract fee, while Fidelity charges an even lower 65-cent contract fee. There are also some transaction fee mutual funds that can incur costs, with Fidelity and Vanguard charging $49.95 and $20 for them, respectively. For bonds, Fidelity's commission is cheaper, at $1, as well as a $19.95 fee if you initiate a broker-assisted transaction. Vanguard unfortunately doesn't offer new issue bonds. However, its secondary market bonds come with a higher $25 broker-assisted fee. Vanguard's funds lower the expenses that ETFs charge to around 0.10%, which equates to about $10 per $10,000 invested. But with actively traded funds, investors may see expense ratios as high as 0.19%. Fidelity mutual fund costs can vary, but they often have expense ratios that are higher, especially for active funds. It's no surprise that Vanguard is cheaper here, as the firm offers many of its own funds to clients. Second, services and features. Both Fidelity and Vanguard have a wide variety of low-cost mutual funds and ETFs. If you're simply looking at the options offered by each firm, Fidelity has more options available. Vanguard has about 2,800 no transaction fee mutual funds and 1,800 commission-free ETFs, while Fidelity offers over 3,700 no transaction fee mutual funds. However, when it comes to index funds, Vanguard offers the lowest expense ratio of any fund company on the market. Since Vanguard is essentially owned by its funds, which are then owned by the investors who hold the funds, expenses are minimized. However, many firms are trying to compete with Vanguard's low-cost funds. Therefore, you may be able to find other firms that have lower expense ratios. Additionally, Fidelity has $0 account minimums, and has several funds that have no minimums as well. While Vanguard also has a $0 account minimum, the company often has fund minimums starting at $1,000 to $3,000 depending on the fund. Vanguard does not waive their minimums, even if you're a repeat investor. But Vanguard may lower the minimums depending on the type of account that holds the funds, such as an educational savings account. Fidelity and Vanguard both also offer Robo-Advisor Services, educational tools, and mobile apps to help you better manage your money. This service has algorithms that help with portfolio construction and asset allocation. They also offer human advisors via phone or online who can help answer financial planning questions and concerns. Vanguard requires a $50,000 account minimum for this service and charges a 0.30% annual management fee. Thirdly, online and mobile experience. Both brokerages have robust online and mobile experiences. So while each firm has features and investments that favor specific types of clients, the quality of their tools and platforms are unquestionably strong. Vanguard's trading platform and apps are fairly basic, in keeping with the general aesthetic of the company. You can do everything you need to do as a low-level investor: make trades, buy mutual funds, and check your performance. The platforms don't have all the bells and whistles an experienced investor might want, but for someone who just wants to manage a few basic investments, it works. Fidelity, on the other hand, has a more complicated and extensive online and mobile experience. While this may be a bit overwhelming for someone without a ton of investing experience, if you have been trading for a while, Fidelity may help you take your investing game to the next level. Fourth, Fidelity wins on expense ratios. Fidelity was the winner on expense ratios. This was true across the board. The result is perhaps surprising given Vanguard's record of historical cost leadership within the industry. Still, it's clear in the data that Fidelity holds the lead on fees. In addition, it is clear that Fidelity is aggressively bringing down the cost of its funds, with zero-fee funds launched in 2018, and of course its recent moves on commission-free trades and fractional trading. So at least for the time being, Fidelity, not Vanguard, has some of the cheapest funds out there, though funds from both providers are low in absolute terms. Fifth is trading technology. Vanguard does not use smart order routing technology, and customers can't route their own orders. Still, the broker reports an average net price improvement of $0.0192 per share for eligible marketable orders. We did not find any ready details about Vanguard's execution speed, which is not surprising considering the broker's target customer is playing the long game. Although its approach to routing is basic compared to many other brokers, it scores points for not accepting payment for order flow. Meanwhile, Fidelity's smart order routing technology seeks the best price available and can access all types of market venues, including dark pools, exchanges, and market makers. The company reports a net price improvement of $0.0264 per equity share and an average execution speed of 0.04 seconds. Like Vanguard, it does not accept payment for order flow for stocks or ETFs. Overall, Fidelity wins in the trading technology department due to its smart order routing technology, superior price improvement, and transparent execution speed statistics. Sixth is costs. Vanguard and Fidelity charge $0 commissions for online equity, options, OTCBB, and ETF trades for U.S.-based customers. Fidelity has a 65 cents per contract option fee. It's $1 at Vanguard. Fidelity will set you back more for broker-assisted stock trades, $32.95 versus Vanguard's sliding fee of $0 to $25, depending on your account balance. Fidelity charges $49.95 for mutual fund trades that fall outside the no transaction fee family. At Vanguard, you'll pay $0 to $20 per trade, depending on your account balance. The margin rates at both brokers are close, but Vanguard's are a bit lower. Overall, you might save money at Fidelity if you trade options, but Vanguard will be cheaper if mutual funds are your focus. Seventh is account and research amenities. Vanguard offers basic screeners for stocks, ETFs, and mutual funds. You'll find news provided by Mount Newswires and the Associated Press, and there are several tools focused on retirement planning. Charting is limited, and no technical analysis is available. Again, not surprising for a buy and hold centric broker. Fidelity comes out ahead in this category. Its research offerings on the website include flexible screeners for stocks, ETFs, mutual funds, and fixed income, as well as a good selection of tools, calculators, and news sources. Its web-based and Active Trader Pro platforms offer customizable charting, with technical indicators, drawing tools, and up to 40 years of historical data. Another plus, Fidelity offers portfolio margining. Eighth is portfolio analysis. Vanguard and Fidelity both provide access to real-time buying power and margin information, internal rate of return, and unrealized and realized gains. Both offer tax reports, and you can combine holdings from outside your account to get an overall financial picture. Something missing from both brokers is the option to calculate the tax impact of future trades. Overall, the portfolio analysis offerings are too similar to pick a clear winner. Ninth is education. The focus of Vanguard's educational content is to help you set and reach your financial goals. Much of the content is in the form of articles. Still, you'll also find commentary and research papers, videos, and webcasts on investment products, retirement, industry news, financial planning, and the economy. Fidelity's online learning center has articles, videos, webinars, and infographics covering various investing topics. There are regular webinars and online coaching sessions for more advanced topics, and learning programs aimed at beginning investors on the app. Overall, Fidelity takes the lead here by offering content that appeals to a larger investor population. At last, it is interesting to see Fidelity's push on low fees and other innovation within the retail investment space. Of course, fees are now low across the board for many funds, so differences are small, but still, Fidelity leads. Nonetheless, Vanguard continues to have an edge in tax efficiency, and if you're in a taxable account, you should care about that. Generally, either Fidelity or Vanguard funds appear reasonable picks for most investors, with the investment strategy being perhaps the more important question. Hope you have learned the full difference of Vanguard funds and Fidelity funds, and if you find this video resourceful, hit that like button to encourage us. If you enjoyed today's video, then let us know by liking this video and leaving a comment in the comments section below. Remember to also click on the bell button so that you stay notified every time we publish videos like this. Till our next video, cheers!